slipping a similar amount. Other drags including Asian Paints. In fact, that is the top Nifty loser, 2% lower. Eternal, there was a large block deal which took place yesterday, 1.5% gone on that. Geo Financial, Hindalco, Trend, M&M, where we got the November sales numbers, that stock too has opened with a bit of a cut. On the way up, Interglobe Aviation, after 7 days of losses, has managed to bounce back a tad bit. Interglobe Aviation opened up higher, but now it's settling with just a third of a percentage point gain. And Bharti Airtel is the top Nifty gainer today, up nearly about 0.5%. Maybe the reading is that Starlink's pricing is not going to be disruptive for B2C. For the regular mobile usage, because it's charging more than about 8,000 rupees. So that is prohibitive compared to the ARPUs that say a Bharti or Jio enjoy, which is still sub 300 rupees. So Bharti is moving up, HUL also in the green. And keep your eye on Cipla. There was this article in ET today which said that because of the rise of air pollution and the weakening, the AQI, respiratory drugs have done very well. So they were pulling out in data from Farm Track, which said that respiratory drugs have actually peaked out and seen a surge in the month of November.
All right, a few stocks that are reacting positively today. We have Kaynes India. The volumes are very, very high for the first 2 minutes. More than 5 lakh shares getting traded on a stock of this size. So large volumes, very high in value. Macquarie, they have an outperform call on the stock. Target price is 7,700 rupees. They believe there are no irregularities, but confidence will require effort from the management. For the time being, the street is buying into that. I'm looking at a JM Financial note as well. They as well are maintaining a buy rating. Target price of 5,400 rupees. So, a couple of bullish bets coming in there from the sell side. And for the time being, volumes are large. So the stock opens up in the green. Physics Wala, the street likes the numbers that they put out, and that stock, in fact, is up and about in today's trading session. One of the top gainers, actually, from the broader markets. Fujiyama, another stock with positive fundamental news flow overnight. Well, that stock as well is up closer around 3%. So green out there. On the flip side, LT Foods, because of what Trump has to say with regard to rice, whether the customer or not is willing to take that hit and pay a higher amount to import his rice, well, we'll have to see. But that comment itself has hurt sentiment. Stock down 6.5%. And Rolex Rings, I recall that was one of the stocks yesterday that went bazooka up, towards the end of trade. But that one, in fact, is seeing some bit of selling today. The Nifty now down 120 points. The PCR is at around 0.62 or thereabouts. 25,800, extremely important on the headline index. The breadth of the market, for starters, is still negative. One stock advancing, 3 stocks declining.
Okay, Vikas Khemani is now joining us, and we just want to go straight to him with respect to what he's making of things. He's, of course, been a stock picker, has created wealth in his fund for his investors over the last few years, and really is focused on the emerging segments in the market. Mid caps, small caps, naturally, is of course where bulk of those ideas lie. He's founder, Carnelian Asset Management and Advisors. Vikas, good morning. Great to have you with us here. Thanks very much for joining us. First, I just wanted to get a mood check from you. And what happened? The broader market pain has been there for a while, but yesterday, just reading the screen, it felt like people throwing in the towel. So, what happened in your opinion? And of course, more importantly, what's likely to happen from here?
I don't know exactly what happened, but what I've heard is that there was a little bit of margin funding selling which came through, especially from the retail investors, is what I've heard, but there's no way for me to verify that. And I think broader market pain, as you rightly said, has been there for some time. Large caps have been, kind of leading this rally in last, couple of months. But I guess wherever there was a froth, which has kind of got clear or is getting clear, that's a good news. It's part of any market, cycle. We all know that last year there were lots of excesses which were built in many sectors and subsegments, and in last 6 to 8 months we have seen them clearing out and getting better. So, and that cleaning process is in some sense very good. Also, I think there's a significant supply of paper, and we have seen how not so good quality paper have not found and been struggling for last 6 to 8 months to see the market. So I think in some sense that whole good quality cleaning process has been going on, and which is a good news in the market, because these are the things which are structurally good for market's health, and also gives a check to the investors that why quality is important, why investing is not just buying momentum. And to my mind, nothing changes. Market continues to remain sort of one of the most promising market. It's a stock pickers market. That's where we always focus. So I think that journey continues. And these kind of times only give you more opportunity to look at interesting ideas, which otherwise, in bull market, you don't get at a good price.
Because,
Vikas, just to finish that point, for viewers who are watching, right, and I think we had Parag Thakkar earlier with us, and he was talking about how over the last 2 days he's become more constructive on small caps, and I asked him, from a timing perspective, of course, you can't time things down to the T ever, but, do you have a view if there is, at least in the very near term, I mean, the market is headed one way, you want to sidestep it if possible and then buy what you like anyway. Maybe, a week later, 10 days later. Any thoughts at all? You don't want to get caught up in maybe like a bit of a downdrift. You want to get better prices, essentially. That's my question. Vikas, go on.
I would say it's not like crazy downdrift in some sense. Like, yes, of course, we've also seen stocks doing well in last, market recovered also and went to 26,000 levels of Nifty, and in mid and small cap also we see a bit of a recovery. So it's not like there's some major crisis which is brewing and one should worry about, These are the, like I said, temporary correction or, cycles, which, and it boils down to if you like a stock, a company, nobody can say I will buy at the bottom, which is impossible. So you have to buy within, as long as it is in your comfort zone, strike zone, that this looks pretty interesting at a valuation where you are comfortable with, and based on your understanding of the growth and the business model. So I think, that's what I mean. Timing the bottom is almost impossible. And when sentiments are down, that's the time we all know that we get the best values and best buys. So hence, I would say that current whatever is going on is a good buyer's market, a good stock pickers market.
Vikas, morning, Rima here. One of the structural themes that you're very bullish on has always been Make in India. And these electronic manufacturing companies, EMS companies, were the poster boys of Make in India and phenomenal returns over the last 5 years. But this year, there's been a big crack in stocks like a Kaynes Tech, PG, Electroplast, etc. What are your thoughts on what we're seeing, the kind of collapse, like Kaynes Tech is down more than 50% on a year-to-date basis? And two, is it a part of your portfolio? And are these the stocks where you're saying you're getting them attractive now?
First of all, I think Make in India or manufacturing story is not only about electronics manufacturing. It is far, far, far more wider, whether it is specialty chemicals, APIs, CDMO, electronics, defense, capital goods, textiles, garments. I mean, it's a very wide sort of segment. So, of course, electronics manufacturing remains a very good segment. But if you see, after the early part, there was a lot of froth got built. Low margin companies got traded at unsustainable valuations. And I think we don't own any of them since last 1.5 years. Because we felt that there's a lot of froth which is there and it cannot sustain. And that's what is playing out. It happens same way. I think if you see chemicals played out between 2020 to 2022, and then last 2 years, we've seen the pain. So in a long-term structural trend, also you will see intermittent cycles and corrections. When markets get too bullish, the time to kind of get out because, you can't sustain 70, 80p, 90p with this, even if the growth is 20-25%. So our view has been, be cautious on this segment. We've been very bullish in the last couple of years on CDMO. That's what we've been playing a lot. And that's where we found a lot of interesting and we've done very well on this year, through the likes of Laurus, Biocon and many more, and Newland and many more. So I think everybody finds their own niche and where you understand the risk reward. But manufacturing theme is intact, will be there for next 10 years, but one has to be watchful of the intermittent cycles and the risk reward of those cycles.
Any other pockets in manufacturing where there is froth building up? Like in EMS where you were cautious, you didn't own anything for the last 1.5 years. Is there any other pocket in manufacturing as the broad theme?
We've been avoiding EMS, defense, railways for last 1.5-2 years. And I think that's where have been our kind of avoid the trade for last 2 years. We've been, so I guess a lot of corrections have happened and then, and probably to some extent you will still find, in a lot of IPOs which went, I guess still there is a lot of, in my opinion, froth. And we've been avoiding most of the IPOs in last, 8-9 months. So I think, you have to see segments where there's a lot of euphoria, people are chasing. Whether it is about anything, it is not about manufacturing or anything. It's about, so wherever the whole market is changing and valuations becomes unsustainable, given the growth and risk reward, you have to avoid. So that's what we do.
Hi Vikas, good morning. Good to see you and good to hear. The timing of the exits as well have been important. I recall Tejas Network, some of those EMS stocks like you have mentioned, you all played it and in fact got out at the right time when things got a little bit frothy. CDMO is one space that you have highlighted, which will be interesting to see. A stock like Laurus disappointed for many quarters and then they started delivering and the street is quite excited about it. But getting into 2026, how are you feeling about the markets? You have been, one of those most bullish commentators that we hear. What is the single biggest risk for our markets? Because the RBI has done their part, the central government as well has done enough to spur growth from here on. However, the global environment is still a little bit tacky because we don't have that trade deal on the table as yet. Is that the biggest risk?
I think I would not call that the biggest risk. Trade deal can happen anytime, and I think there's a high probability of that's happening. But again, you will never know till it happens. But I don't think that's like one of the biggest risks. Of course, you don't want any kind of adversities with US, but if that's given, and I'm sure it'll work out. But I'm quite positive about markets given 2026 because I think 25 has not been so great here, and every 3-4 years there will always be a market which kind of gives soft return. If you remember, I take you back to the memory. 2022 was that year. 21 was great. 22 was poor. And most people turned bearish, and 23 ended up being good year. First half of 24 was good year. So, and then we saw September onwards, market kind of peaking out, correcting, and then we went through this whole trade deal. And in 22, it was Ukraine war, which was dominating the sentiment. Now, Operation Sindoor trade deal has been dominating the sentiment in this year. So I guess uncertainties, every in investing vintage matters a lot. And I used to say this in 2022 that this vintage will, sort of give very good risk reward returns. Even if after this correction, 22 vintage is giving good returns. So I do believe that even, in 25 or early 26 vintage will give a very good return. I do believe that 2026 will be a good year for the simple reason you have seen, you are seeing earning recovery happening. You are seeing monetary stimulus. You are seeing fiscal stimulus. You are seeing, one of the significant underperformance vis-a-vis any of the emerging markets. This year, India has delivered almost negligible return in dollar terms or even rupee terms. So I think, all kind of stars seems to be getting aligned, and there will be one trigger where I think, in my opinion, markets will do well. So, and trigger comes, we don't know when it comes. It's like I said, 2022, nobody knew when the trigger will come. When everybody was bearish, market kind of turned back and, started doing well. So same way, I guess, in 2026, I am quite optimistic about it. As far as the risk is concerned, I think this can come from any sources you don't expect and any time, you don't expect. It's very hard to kind of predict that this risk will come from this, but generally speaking, I've been saying this, I don't see any structural risk as far as India is concerned. Tactical risk can come, maybe slow down of the domestic flow. To tactical risk can come from oversupply of IPO. Tactical risk can come from, some regulatory changes. Those are the ones which one cannot really predict and call for.
Just one point, with regard to this advanced decline ratio, the breadth of the market is so bad. And in the past, when it's got so bad, actually, the rebound has been equally as powerful. And there were signs of some retail capitulation. And the last time we saw this sort of retail selling as well, where the larger clients came in there and sold, there was a bit of a bounce. How far are we from that bounce? That's going to be important. But the broader markets have seen a sharp correction.
Yeah, absolutely. Vikas, if you will allow it, so we're talking about excesses getting cleaned out, and eventually that'll be healthy for the market, as we've seen over the years in past cycles as well. I have a, if you will, as I said, if you will allow it, I have a viewer question on PTC Industries, and I think it's a stock that you own. We've spoken with the company, outstanding defense play, and FY 27 is going to be, if I have my notes correct, 27 is going to be a big acceleration year, and 28 is going to be even bigger acceleration year in terms of earnings growth. But even at, I'm looking at some projections, 450 rupees in earnings per share on 28 earnings. It still comes to you at about 40 times earnings. Just your thoughts, Vikas, on something like this, and your thoughts.
Prashant, it will be unfair on my part to comment. It's a good company. Now anybody who wants to invest can do their own research, and especially I do not comment on my personal holdings and all those things. So it'll be hard for me to do that. But, all I can say, it's a good company. Now, whether to buy or not to buy is everybody's individual call.
To buy or not to buy. No, got that. Sorry, you earlier were talking about, did you say fintech is going to be a good year for fintech next year? Is that what you said? Or did I misheard you?
No, I didn't say for fintech. I said generally it should be a good year for market. Financials are, of course, likely to do well.
Okay.
So I didn't comment specifically on fintech. But in general, I'm quite optimistic about markets for next year.
So in terms of the sectors you like, just to recap this entire conversation, manufacturing, particularly CDMO, specialty chemicals, finance you've been bullish about. And the other theme is, I believe, luxury discretionary spending. In that, you've spoken about it in the past. Do you still like it? And if yes, sub-themes, sub-segments in that?
I think consumer is something we've been quite positive since last 6 months. We never owned consumer in last 5 years, but in last 6 months we added a lot, and specifically we added automobiles. We think that there's a good sort of uptake which is happening in that after a long time. We are beginning to see, and it's likely to sustain. Derivative of that, you can play in auto components as well. Within automobiles, I mean, consumer, of course, discretionary will do well. Companies like which are positioned in the consumer discretionary, likes of LG, Voltas, and all those kind of companies, basket can do very well. Of course, individual risk what one has to understand, but in segment as a pack, we are quite optimistic about it. One more sub-segment I think we like is CV cycle. We think a CV cycle is coming after a long lull. Maybe still not pre-COVID levels, and now we are beginning to see sort of pick up out there, and which typically can last 2-3 years. With this time around, interesting part is there's a good profitability structure as well. So, and balance sheets are solid. So I think that segment has the potential to get even re-rated.
All right, Vikas, we'll leave it there. Thank you very much for joining us, and we'll leave you to it on those decisions as you put well, to buy or not to buy, right? And each one, of course, will have to make their own decisions. But for now, it's a market which has been under pressure for some time. As I said, especially broader markets, and yesterday felt particularly painful. Well, Kaynes is the next name that we want to talk about. I think from the highs, not from the highs, actually, YTD, stocks lost about 50%. The reasons are well known now, well advertised. We had the management with us. Macquarie has put out a note this morning with, I think, a counter kind of bullish view on this one. Let's now go across to Upasana for this. Upasana, take it away.
Well, Macquarie has given an outperform call on this stock with a target price of 7,700 per share. It says that there were no irregularities, but management will have to take serious effort to regain confidence for the investors. Now, company has defended itself against the reports of accounting irregularities by accepting disclosure shortfalls, but it feels that the management clarification was reasonable. Doubts have been raised on various aspects, but despite that, brokerage sees strong cash flow generation and organic growth for the company. It also believes that a change of auditor is needed to restore this confidence, is what the Macquarie has highlighted.
Okay. Thank you very much for that. Let's turn our attention now to Kalpataru Projects. We have Amit Uplinchkwar, the director of Kalpataru Projects, joining us in the studio now. Amit, thank you very much for joining in. Before we talk about H2 outlook, FY27, etc., this Jal Jeevan mission, that's come under the scrutiny. Are you all getting impacted? What percentage of your order book is related to Jal Jeevan, and what is the latest? Because what we heard about a month back is that Centre has stopped giving additional funds related to this mission.
So, Jal Jeevan would be close to maybe 10% of our order book.
Okay.
But I think there are several categories of companies out there, but I think we have a clean chit on all audits, so we don't have a problem there. And I think because the receivables are from the sovereign, I don't think we are overtly worried about that. Of course, it hurts us in the short term because, we have receivables. But the indication that we are getting that it should get sorted very quickly, because at the end, these are our irrigation and drinking water projects. So I think FY27 hopefully is a year where all these get cleared and new ones come.
And the receivables amount related to this?
So we'll be upwards of 1,000 crores.
And your overall receivables?
So we don't have any other receivables per se.
Yeah,
normal standard payment cycle, because all our clients are very, very liquid, so that's not a problem.
And as of now, fresh fund releases related to Jal Jeevan mission is on hold. I mean, does that impact your H2 revenue outlook?
So, at the end of H1, we've had 33% growth in our revenue. So that covered sort of the shortfall that we had coming in from water. And obviously, we're very cautious, and so is everybody else in the sector. we are going cautious in terms of our revenue delivery because that means deploying more capital. So I think till we have clarity on that, we are going to go cautiously. But overall, we don't see that much of a dent because it's less than 10%, as I said, of our order book today.
And you've got a clean sheet.
We've got a clean sheet. We don't have a problem at all on all our audits.
But when do you get this money, sir? There's receivable being high. I've been speaking to a lot of industry people, and they've been optimistic for the last couple of months that it's coming.
Yeah.
They've got some maturities as well from various governments that they're likely to release that fund, but still not happened.
So, I mean, I can only tell you what we hear, and everybody said, don't worry, this is, at the end, it's sovereign. So money will come to you, but we don't have a specific timeline. I mean, we were hoping last quarter things start moving. Yes, monies do keep coming. It's not like nothing comes at all. But I think for all of it to get released, hopefully, we are hoping that it happens by the Q4 of this year, if not, the beginning of next year.
But quarter 3 so far has been a trickle?
Quarter 3 so far has been, I would say, just about a trickle, a little bit more than a trickle.
Amit, the big one, of course, is transmission and distribution for you. So give us a sense of how that is, what's happening there and in this quarter, and what's the outlook as you look into calendar 26?
So, this quarter, of course, we will talk about it when we come to the end of the quarter. But at the end of H1, we've had great, as I said, 33% at a company level. But transmission, both international and domestic, there is a huge surge. I mean, today, let's talk international first, right? We've got grids across Balkans, across some of the old, more evolved economies, which are 20, 30. They're going towards the end of cycle, some as old as 50 years old, and they all need replacement coming on. The energy mix has also changed, right? So it's all renewable, especially in the evolved economies, and they are obviously far away, whether it's hydro, whether it's solar, or whether it's wind. And connectivity to the grid is going to be a huge opportunity for us. So I see at least the next 10 to 15 years unabated T&D opportunity overseas, right? Africa, Middle East, LATAM, Europe, right? From a supply standpoint. In India, again, you know very well the renewable targets that we had set by 2030. People are now waiting with their power plants, sometimes waiting to evacuate power. So I think India also, as HVDC has come in, long distance power lines, so our unit values go up, realizations get much better, and that you can see in our margin profile as well, that it's getting better. We are now H1 almost close to 5.3% on a PBT level and almost close to 9% at an EBITDA level, in spite of having some businesses which are capex heavy. So I think I'm very, very bullish on the T&D sector, and being in the top 3 players in the segment, not just in India, but also globally, and being completely vertically integrated. As you know, we have 2 gigafactories for manufacturing towers and everything else. So I think I'm very bullish.
You mentioned renewables. There was this one headline which 2 days back saying that for thermal power in India there was this 2035 odd deadline, right?
Correct.
That you're going to add up till 2025. But now apparently it's being extended all the way till. I mean, there is talk that you need more addition all the way to 47 apparently. Right?
Because if you see the last 24 months. Huge thermal new capacity builds have been ordered out by both private as well as government gencos. And I think the reason being that, the mix when this policy was made of 2034, the amount of absorption that's coming out through data centers and this whole EV drive that has gone in, the requirement of power has just ballooned, right? And also plus a lot of the private sector capex that was not happening for several years, and most of the private sector capex went in buying distressed assets. I think that cycle for once, and we are very, very happy to see that change. And as you can see, a lot of private sector capex is coming in new builds. And that is also driving up power demand. So I think you're right, probably 2047, 50 sheer demand of that, and issues that come with renewable instead of, renewable in grid evacuation, etc. I think this is there to stay. But plants are becoming more friendly. There's zero emissions. There's NOx come in. So it's not how a thermal plant used to be, 10 years ago.
Amit, what about the rupee move? How does it impact your business? You'll have some part of your money that comes in from international operations. So do you gain on that front? And in terms of your borrowing mix as well, is there a dollar-denominated borrowing that you'll have? How does it impact the company on the whole?
So in general, not much, because, as a policy, and we've all gone through these severe cycles. So wherever we have commodities that are hedgeable and dollar rupee that's hedgeable, we always keep ourselves hedged. So we don't want to make money out of a dollar rupee movement up or down. We would rather focus on our EPC business and keep that hedge. So it really doesn't bother us much.
That's good to hear. All right. And brilliant. Just look at that. We have that plate up for our viewers on the screen. From around 160 crores in the last 26 years. You've moved to around 22,000 crores. Good on y'all.
And 26 years, Amit, because we celebrated our 26th year birthday.
So we've had the journey along with you, and I think we've grown as you have. And thank you for being there with us all the time.
I mean, actually, Nigel, we were putting those numbers up, right? Over the last 26 years, the market cap, overall NSE market cap is up 100 times.
100 times.
You're up 120, 130 times, right?
Right.
I mean, with the number 166 too.
Everybody wants more always when it comes to market cap. But no, yeah, it's been a great journey with CNBC and at Kalpataru over the last 26 years.
All right. What about the way ahead? You have some exposure, I think, to Sweden as well as Brazil. Look at maintaining those ventures out there. Any kind of IPOs, value unlocking for your shareholders. You want market cap, you need to do some of this stuff. Anything planned?
So, we obviously keep looking at opportunities where we can maximize value. And of course, we are evaluating those options. So far as new segments are concerned, we are constantly adding capability. We've got Center of Excellence now, which is a huge sort of GCC of sorts of Kalpataru back home, from where we support Sweden and we support all our businesses across various sectors. And I think Sweden is an aging grid, as I said, because they were one of the first ones to come out with grids. And I think great opportunity there for us. We are the leading contractor, EPC contractor in Sweden. Our water businesses are going overseas. Our urban infra mobility businesses are going overseas. You would have seen a great Israel push, which you guys covered as well. And I think we have opportunity for, after a long time, to take other than transmission, our water, our airports, our urban mobility businesses also outside, oil and gas. Huge resurgence in the petchem and downstream space, which we are also following. We are doing a very, very large project with Aramco, and we are looking at ADNOC and several other companies where we are qualified. And so the room ahead looks very, very pretty.
So what's the contribution of international today to your revenue and order book, and how might that change with this push in the next, say, 5 years?
So, overall basket, our revenue, we've tried to keep, our target is to be 50-50. Obviously, you cannot have a straight line. Sometimes the international go up, sometimes domestic go up. But the idea is to keep a balance and also within that keep sectoral balance. So not have any one sector be too overweight. Of course, transmission, because we also have our own manufacturing, gives that added revenue. But the idea is to keep a balanced approach across sectors, geographies for us.
Amit, I was just some of these reports, global reports in terms of the grid opportunity, because they're old and aging. Even in the US, 30, 40-year-old, right? And some of the numbers are, humongous. I mean, unimaginable. And of course, not now, but it'll all have to be done over the next 5, 10 years. Right. But you're there whenever this opportunity comes up, or it'll be again, low-cost Chinese kind of firms going in there and outbidding companies like you. But no, it's not going to be like that.
So America, I really don't know.
Not America, but some of the others. Even America.
The world is so big, right? I mean, just look at that today. I got asked a question last week. Are you guys looking at entering new sectors in the EPC business? I said we practically cover all of them. And with overseas markets opening up for all our other sectors, I think we just want to be present in our 8, 9, 10 sectors and keep focusing on that, build capability, keep adding more tech. And I think that's where we are. I don't see the need to do something different for the next 5 to 10 years. There's enough opportunity to grow.
Yeah, no, absolutely. That I completely agree with. Thank you very much, Amit, for dropping by.
Thank you so much.
Really appreciate
Thanks for having me, and congratulations on your 26 years.
Thanks very much. Well, I think we're going to take a quick commercial break here. The market's down 200 points, so it's pretty tough out there once again this Tuesday morning. On the other side, we have the management of Titan to tell us how did festive demand kind of pan out. Just a status check. Stay tuned. Coming up.
"26 years of CNBC-TV18.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by National Stock Exchange, Soch Kar, Samajh Kar, Invest Kar. And Century Ply Club Prime, Raho Befikar.
We have carefully reviewed your performance and promoting you to branch manager.
Sir. Hello. Motilal Oswal.
When life goes to the next level, download Rise by Motilal Oswal. Investments and securities market are subject to market risks. Read all the related documents carefully before investing.
अपने दिल के हिस्से की सेफ्टी से समझौता? नो चांस। इसलिए पॉलीकैब ग्रीन वायर्स, जो है लेड फ्री और इमरजेंसी में दे कम टॉक्सिक गैस। पॉलीकैब ग्रीन वायर्स, इंडिया सेफ हैप्पी कनेक्शन।
Sir, try berry pulao. Too good.
Good, no? Hey, why are you giving him such looks? Ignore tips and use your own mind before you order. Lots of people give unsolicited stock tips. It can be dangerous. Study the company and the risk associated. Invest only after analyzing.
सोच कर, समझ कर, invest कर.
This is Network 18, and you're watching CNBC TV18.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best hai sabko pata hai. In association with Servo Hypersport F5, when speed is your default.
26 years of CNBC TV18.
Well, Titan has been a massive wealth multiplier over the years, delivering consistent growth over time. Mangalam caught up with Ajoy Chawla, the CEO of Titan Jewelry Business, to discuss the company's growth strategy going ahead, the impact from high gold prices, and much more. Let's listen in.
Whether it was Mr. Desai, who founded the company, or Bhaskar, who led it for so many years, and in the last 6 years, Venkat has led it. So a large part of it is really being the custodian of an organization, or as Bhaskar used to call it, an institution called Titan, and ensuring that we stay the course of excellence and stay the course of performance.
From a performance standpoint, let's talk about that. First half of this year, revenue 18% growth. You've seen margins around that 11-12% mark in the jewelry business. Second half, seasonally a lot stronger. What is your anticipation of how this year ends and thereafter the target for the next year?
So how the year ends is very difficult to predict because every quarter, every month tends to be volatile. I think quarter three has begun pretty well. We had a very good festive season, and November also has been pretty good. So far, so good. I think we'll stay with whatever I had shared in the investor call, which was in early November, to say that we should hopefully, by the time we get to December end, we should hopefully be better than our first half results in terms of top line growth. We should certainly see a YTD December growth, which is higher than what we saw in the first half.
You said that the third quarter was good for you. The first 9 months of this year, your growth will be a lot better than the first half of this year, where the revenue grew 18% of the jewelry business. I just wanted to understand a little more on the third quarter performance so far. What kind of growth do you anticipate coming in, and how will that be differentiated between volume and value? Because at one point, gold prices were surging. Thereafter, they declined. And at every decline, people started purchasing more in the stores. So how did that equation pan out in terms of buyer growth, volume growth, and value growth?
So while I can't share figures because we share that once a quarter with the stock exchange updates, but I can give you a qualitative feel. We did start seeing some amount of buyer growths come up in October and November. I'm not sure whether it was related to gold prices correcting, stabilizing, etc. But we did see a lot of improvement there on buyer growth. Value growth continued to be good, also on the back of higher gold prices. The third piece I would like to share is that exchange. We actually decided to bet on exchange in a big way and actually make it a much larger campaign than we usually do. We are treating it strategically, and that is beginning to show up. So we believe a lot of the volume growth that we saw, when I say volume, I mean buyer, has come on the back of this exchange lever. and that is continuing. Let's see how it progresses forward. This is also the wedding season where exchange is usually good.
The last time we spoke, I asked you about the Zudioization of jewelry. And with higher gold prices, obviously, there is preference for lower caratage, higher studded ratio, etc. So wanted to understand if that's played out. Because we also spoke with Puneet Chatwal. He said that forget Zudioization. For the hospitality industry, there will be gingerization of the Taj. Now I'm coming to another Tata Group company. What's the, Tanishkaization? How do you do that?
So I think we've experimented a lot with lower carat. Obviously, with gold prices going up, as a jewelry brand, we need to innovate to be able to solve for customer issues. One way to solve for it was for exchange. The other way we are solving for it is by introducing lower caratage jewelry. Our initial pilots have been very good. We are in the process of actually ramping up in a big way. We believe that this is the way to go, because there is no end in sight in terms of where gold prices will go. It's not dependent on us at all. It's dependent on international forces. It's dependent on risk in the world economy. It's dependent on what central banks decide to do. As regards Zudioization, I think our portfolio strategy with Tanishq, Mia, CaratLane, and Zoya, of course, is working very well. And at the lower end, in the below 1 lakh rupees price point, where I think a large number of new buyers come in, or where a large number of younger buyers also come in, we believe that our portfolio strategy is playing out well. There is a strong presence of all our brands across all the key markets, at least if I can say Tanishq, Mia, and CaratLane. If you go to a jewelry high street market, you will find all these brands very strongly present. And in a way, the customer gets a lot more choice. And the price points are competitive. So I think, given the portfolio play, we are seeing a very good opportunity to corner a larger share of new buyers. In gold jewelry, in fact, the pressure on buyer growth, especially in the sub 50,000, continues to be high. And we think that that segment may take a little longer to kind of revive.
What does that do to your margins on the jewelry business? 11 to 11.5% is what you've guided. Do you maintain that? And secondly, competitive intensity. How is that been versus what it was, say, about a year and a half ago, where it was really heating up?
I think competitive intensity continues to be very high. There are enough and more players who are already there, and every player has access to good capital. Therefore, there is a lot of retail expansion taking place across many players, including those which have got newly listed, etc. We, of course, are continuing our aggressive push in terms of retail expansion, and not just expansion, but also, transformation. On the margin side, Mangalam, I would say that given the continuous rise in gold prices, there is always a downward pressure on margins, especially on the studded gross margins, because the relative material composition is changing, and diamonds gives you a higher margin than, let's say, gold. And if the weightage of gold is to diamonds changes, the downward pressure does go up. And therefore, we think we should remain on an annualized basis in the ballpark of that lower range of the 11%. Let's hope.
The eyewear business, everyone's been questioning, what Titan's calculation of the TAM is, whether, it is as big as, say, something like a Lenskart projects, etc. or not. What's your plan of growing that piece of the business? Because suddenly people are looking at ascribing value to the eyewear business of Titan.
Our view of the addressable market on the eyewear business has been in the ballpark of 25 to 30,000 crores. And these are the best estimates we could come up with. We know that there are different views on that front. On eyewear, in terms of growth strategy, I think we have been pursuing a volume-led growth strategy on the one hand. And in fact, our pricing has become sweeter. We have products which are at the entry point. And after a long time, we are beginning to see good volume growths. In terms of the value side of it, from premiumization perspective, there is an entire transformation program underway. So quite a few of those stores have come up, and they are doing exceptionally well. So we see this two-pronged strategy actually working well for us. And that would start showing up in both our volume growth and value growth as well. And given the operating leverage in that business, that will then also kick in very well in terms of our EBIT.
A one-word answer on what you would like to focus as the leader of Titan most?
Growth. Growth is our natural aspiration, and it's something that we've been good at. And therefore, and to drive growth, innovation.
Well, that was the word coming in from Titan. For the markets, the weakness continues. The Nifty is now below 25,750. 1.5% gone on the mid-cap index. So the sell-off, the bloodbath continues. The Nifty small-cap index too, down a similar amount. The advanced decline ratio is 1:7. Stocks getting hit hard include rice manufacturers like LT Foods, KRBL. This is after Trump threatens tariffs on Indian rice manufacturers. Ria joins in with more.
Well, yes, both of these stocks are taking a hit in today's session after US President Donald Trump has signaled potential tariffs or curbs on Indian rice. Now, as per Trump, farmers in the US have blamed the alleged dumping of rice from India, Vietnam as well as Thailand into the US for the falling rice prices, which is why he may take some measures against Indian rice exporters. Now, in terms of the companies that have been impacted from this, LT Foods, for LT Foods, North America accounts roughly around 46% of its overall top line in FY25. The stock is down roughly 7 to 8% today on the back of this news. And even for KRBL, the direct exposure to the US remains quite limited for them. Less than 2% of the FY25 revenue came from the US, but this stock also down around 1 to 2% today.
Thank you. And Kaynes Tech has rebounded after Macquarie has a bullish note coming out on the stock. Outperform rating. Upasana joins in to tell us why they see promise in this company.
Well, certainly, Macquarie has given an outperform call on this one with a target price of 7,700 per share. It says no irregularities, but will need effort from the management to regain confidence of the investors. Now, company has defended itself against the reports of accounting irregularities by accepting certain disclosure shortfalls. But the brokerage feels that the management's clarification sounded quite reasonable. Doubts have been raised on many aspects. Despite that, brokerage sees a strong cash flow generation and even organic growth for the company going forward. Hence, it believes that a change of auditor is needed at this time to restore the confidence.
Thank you very much for that. By the way, KRBL has recovered while LT Foods is still down over 7%. KRBL is now back in the green, and from the day's low, it's managed to recover close to about 3%.
We'll take a break, Rima, right? I mean, I think it's 10 o'clock just on...
Stan, more than 40 out of the Nifty 500 stocks are actually at 52-week lows.
Wow. Market breadth as well, maybe just a quick look. It's actually exactly a repeat of yesterday, almost exactly a repeat. 5 stocks are down for every 1 stock which is higher. So it's looking pretty bad. Chandan Taparia is with us at Motilal Oswal Financial Services. Chandan, good to have you with us here. Thanks very much. You know, it's one of those phases where I guess selling begets selling. There is also this element of trying to protect profits, at least from an institutional perspective. One is picking some of that up as well, that, you know, you've done well over the last couple of years. You don't want to kind of give away that as we close this year out. Just your thoughts, Chandan, on what's going on and road ahead.
Good morning, Prashant. Thanks for having me. And yes, I think this is the phase where we have seen sustained selling pressure. However, in last couple of weeks or months or quarter, the market was holding well. But now from last almost 2 to 3 months, sustained selling is clearly visible in mid-cap, small-cap counter. However, Nifty just few hundred points away from its all-time high. Just couple of days back, it made lifetime high at 26,325. But most of the stocks, especially from the mid-cap and small-cap, are down. So we need to keep couple of things in mind. First, short-term trend is slightly negative, as most of the indices are trading below their 50-day exponential moving average. But Nifty is not likely to go much lower because selective heavyweights counter are finding support-based buying at lower levels. So there will be divergence between broader indices versus other sector and stock-specific action in the market. If I totally look at the Nifty, the major concern happened from the USD INR, which is continuously weakening, and because of that, FI's flow is missing in the market, and the FI's long-short ratio again come back to 12%, which has seen some spike. So I believe upside could be kept in the Nifty index, but again, multiple support and higher base continue to hold the broader market. So as of now, till it remains below 26,000, the trading range has slightly shifted lower to 25,500 to 26,000. Earlier, the trading range was in between 25,900 to 26,300. That is slightly shifted lower due to the recent fall. If you talk about the Bank Nifty index, that has seen a corrective move of around 1,500 points from higher levels. But again, the major structure has not changed. It is respecting well above its rising trend line and holding above its 20-day exponential moving average. But I believe 58,250 to 58,000 could be the key level. So if someone is looking for immediate point of view, we need to keep in mind that the structure is slightly negative. But if someone is looking for positional point of view in Nifty and Bank Nifty, I believe 25,500 in Nifty and 58,000 in Bank Nifty could be the key level to accumulate if you have slightly bigger perspective in the broader market.
All right. Specific stocks, Chandan, out there that you're focused on, positional or trading wise?
Yes, so advanced decline ratio is slightly negative in the broader market. So many counter are making lower top, lower bottom. But for buying side, I'll first pick Bharti Airtel. I believe this counter will act as a resilience. Already we have seen a corrective move in last 7-8 days. And the good part is counter is holding well and respecting to its rising support trend line. So with the support of 2010, looking for a bounce towards 2200 kind of level. Second trading area, that is sell on K-Fintech. We have seen a breakdown on the daily and the weekly chart. In fact, short built up has seen. So because of that, some weakness could be noticed. One can sell with hurdle of 1048. It can retest the key support of 990 marks.
Thank you very much, Chandan, for joining in. BSE is down 4.5%. Coforge, which has seen so much interest in the mid-cap IT pack, has turned year-to-date negative. They had their investor day yesterday. The management said all the right things. They held on to their target about hitting $2 billion by Q4 of this year, 14% EBIT margin, 70% in terms of free cash flow to profit, but the stock is down close to about 4% Aether Energy is weak in trade. Grow, one of the big listings of this year, still above the issue price of 100 rupees, but the stock today is correcting. Get into a break. On the other side, we'll talk commodities with Manisha Gupta.
"26 years of CNBC-TV18.
Fly Emirates, fly better.
सपना था कि खुद का ट्रांसपोर्ट बिजनेस हो, पर फंडिंग मिलना इतना आसान नहीं था।
मशीनें तो खरीद ली थी, पर बड़ा ऑर्डर लेने के लिए पूंजी की जरूरत थी। घर से ही केक बनाने का काम शुरू किया था मैंने।
किसी के यहाँ टेबल कुर्सी बनाते बनाते मुझे ये हौसला मिला कि मुझे खुद का काम शुरू करना चाहिए।
फिर इनका साथ मिला और नए रास्ते खुल गए।
फिर इनका साथ मिला और मेरा बिजनेस इतना बड़ा हो गया। फिर इनका साथ मिला और फैक्ट्री यहाँ तक पहुँच गई।
फिर इनका साथ मिला और मैं इस मुकाम पर पहुँच गया।
सुन रहे हैं ना? ये सब एक ही नाम की बात कर रहे हैं और वो नाम है पीएनबी। आपका सपना सिर्फ आपका नहीं होता है, वो पूरे देश की तरक्की का हिस्सा होता है। इसीलिए पीएनबी लेकर आया है एमएसएमई लोन स्कीम्स जो छोटे छोटे बिजनेसेस को आगे बढ़ाने के लिए बनाई गई है। इजी डॉक्यूमेंटेशन और अट्रैक्टिव रेट ऑफ इंटरेस्ट पे लोन आपको देता है पीएनबी, वो भी बिना किसी झंझट। झट से पीएनबी का भरोसा, अब हर व्यापार होगा बड़ा।
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
यार सोच रहा हूँ पॉलिसी बाजार से टर्म लाइफ इंश्योरेंस ले लेता हूँ ताकि मेरे बाद फैमिली को पैसों की कमी ना। तू भी ले ले
यार, अभी तो यंग है यार, बाद में देखते हैं। आजा।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
The best holiday ever's finally over.
When you fly Emirates, your holiday isn't over until your flight is over.
हर सोच में है हौसला, हर पल में है जुनून, हर सपना अब रंग लाए, हर मुकाम दे सुकून। रोशनी से भरे रास्ते हैं, जोश से भरा है दिल, मंजिल चाहे जो भी हो कर लेते हैं हासिल। बुलिश ऑन इंडिया, देखो बढ़ रहे कदम, बुलिश ऑन इंडिया, आसमां छुएंगे हम, बुलिश ऑन इंडिया, फ्यूचर के लिए है तैयार।
Crores of Indians believe in the nation's financial growth. So do we at ICICI Prudential Asset Management Company Limited, along with our 1.5 crore investors. Together, we are bullish on India.
26 years of CNBC-TV18.
Welcome back. Now, Trump has re-raised the prospect of steep new tariffs on Indian rice exports. So what share of Indian rice exports actually go to the US? Is India really dumping? What impact will this have? Manisha joins in for a deep dive. Manisha.
Well, thank you so much for that. Well, yes, the big statement that we've seen or reacted to or woken up to today clearly has been the statement that has come in from the US president, suggesting or saying that a possible new tariff on the Indian rice perhaps could be coming in. But let me tell you that Indian rice and perhaps the global rice is in plenty this year. Is the reason this is a second straight year that you have seen the global rice futures continue to decline. They're down by nearly 27% in 2025 this time around. If you look at the International Grain Council numbers, it tells you that the global rice trade is estimated at 59.9 million tons, and the global carry forward inventories are at a huge number, which stands at 187 million tons. So not just India, but various other producing nations have produced big numbers of rice this time around. So record numbers from India. The Indian government is holding very big rice buffer stock as well, and the way the MSP has been going higher, it's nothing to look at, that you will be perhaps looking at higher rice numbers going forward as well. Now, when you look at the global rice dynamics herein, rice is the third most produced cereal crop in the world. This is after corn and wheat, of course. Over 100 countries produce rice, but 15 nations provide 90% of the overall harvest, and most of these countries are in Asia. Now, when you look at the US markets, because that is what we're talking about right now, it is the 5th largest rice exporter. I also want to take you through numbers and what is the country, what they produce, and what is their global market share as well. So India, of course, is the top producer when it comes to rice. 150 million tons is what we did last year. And with that, India is at 28% of a global share. China is the second one with 145 with 27% of global market share. So between India and China, that is more than 50%. So these two countries clearly handle the global rice share there. Bangladesh is the third country there with 7% of market share. And then you will see Indonesia, Vietnam. These are important countries also, because 6 to 5% each is what their country also has a global market share of. And then comes US with 10 million tons and 2% of global market share. So in that sense, it's a lower global market share, but it is the 5th largest exporter country as well. Now, interestingly, when you look at the India rice exports, and as you can see, that is really the concern coming in from the US president. Every year we have seen numbers increase when it comes to rice export from the country. 2024 was 16 million tons, last year was 19 million tons, and this year 23.5 million tons of rice export is what India perhaps could be looking at. And this is inclusive of basmati and non-basmati. Remember, it was last year when Indian government removed all major restrictions in sense of exports, and is the reason that you've seen a very strong number coming in sense of export there. Also, when it comes to basmati, India exports to West Asia, Europe, and various other countries. When it comes to non-basmati, the newer market that India is looking at is South Africa, Philippines, Malaysia as well. So it is about the Asian countries and African countries which seem to be importing a lot of rice from India. Expectations are that with the kind of rice availability that you have in India, you could be only looking at higher exports. With what US has said, whether or not that throws a spanner in the wheel is something that the street will have to watch.
Thank you, Manisha, for explaining that so well. We will slip into a break on that note. On the other side, Lata will speak with Ashish Gupta, CIO of Axis AMC, on financial market, equities, bonds, currency. Stay tuned.
26 years of CNBC-TV18.
You want to talk business? Meet me in the onboard lounge.
आपके कलीग्स भी आपका परिवार है। इनकी सेफ्टी से समझौता? नो चांस। इसीलिए पॉलीकैब ग्रीन वायर्स। इनके सुपीरियर इंसुलेशन इमरजेंसी में दे कम धुआं। पॉलीकैब ग्रीन वायर्स, इंडिया सेफ हैप्पी कनेक्शन।
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum.
Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
आपका और हमारा बहुत ही लंबा और करीबी रिश्ता है। हम उस चटकारे में हैं जो आप अपने दोस्तों के साथ लेते हैं। उस दराज में है जिसमें छिपा है माँ के राजमा चावल का राज। उन सांसों में है जो आपके पलों को महकाते हैं। तो अगली बार आपको कोई चीज पसंद आ जाए तो उसे पलट के देखिएगा, जरूर हमारा नाम दिख जाएगा।
होम EMI 50,000।
तो जा रही है। आपकी क्या तैयारी है? पूरे सीलिंग का 20,000 आउटगोइंग है जा रही। आपकी क्या तैयारी?
मौसा जी, मेरी शादी का गिफ्ट।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIP के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWP के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Speed, it's relative. The more you speed up, the more the world slows down. And when you are fast enough, everything becomes still. That's when you see the world as it truly is. Servo Hypersport F5, when speed is your default.
शुक्ला जी।
हाँ जी बंद है।
सुनो।
शुक्ला जी।
अरे कल अनाज बैंक बंद है।
बैंक?
जब से ये दुकान खोली है मैंने तब से बैंक का ही तो काम कर रहा हूँ। अरे डिपॉजिट करो तो फॉर्म भरो, विड्रॉल करो तो फॉर्म भरो और ऊपर से उसके लिए एक्स्ट्रा चार्जेस भी दो। QR, कार्ड पेमेंट, बैंक ट्रांसफर, सबका हिसाब किताब तो मुझे को रखना पड़ता है ना। तो मैं तो बन गया ना चपरासी।
नॉट बैंकिंग विद AU।
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। मतलब फटाक से AU।
हाँ जी शुक्ला जी, सोच बदलो और बैंक भी।
AU।
26 years of CNBC-TV18.
Welcome back. We are sticking with markets because the news doesn't look very good. Indian markets, be it stocks, bonds or currency, are not responding to good news at all. Remember, all three markets fell quite sharply after that 8.2% GDP growth news on 28th November. They have also been falling since the monetary policy, a policy where the RBI gave a rate cut and much higher than expected liquidity and adopted a reasonably dovish stance. To understand what ails the market and which sectors still hold hope, I'm joined by Ashish Gupta, the CIO, Chief Investment Officer at Axis AMC. Ashish, good morning and thank you very much. We are continuing our 26th birthday celebrations with some of our marquee guests. So thank you very much for joining us, particularly today. I'm going to start with the negative news. What's ailing the market? Why is it not responding to any good news?
I think the challenge in the market actually stems from really the unrelenting supply that we are seeing. Right? So as you would be seeing, now we are going to hit nearly 100 IPOs this year. I think last year the count was about 91. This year even the month of December is quite busy, and you'll see the total count going to over 100, nearly 180,000 crores of new paper coming to the market. And actually, in addition to all the IPOs, we are seeing a very large amount of stake sales that continue to come through. And in the last 2 years, the amount of stake sales that have come through from private equity, from promoters, has been 2x what's been there in the primary market. So if you add the numbers for this calendar year, the total amount of supply this year will probably be close to something like 5.5 lakh crores or north of that. So it's very challenging for really the market to be able to absorb this consistent deluge of supply and provide returns to investors.
No, I take your point, but nobody is holding a gun to the market and asking them to buy primary issuance and not secondary issuance. It still seems to be a choice. I was expecting you to answer the foreign portfolio distaste for Indian equities. Well, we had a decent growth number, even if you can squabble about the deflator. And then we had a policy which is, extremely benign to the markets. But the FPIs have been sellers. It seemed like it would be a smaller and smaller number. Last 2 days, we had, 400, 500 crores. But it is still in sell mode. You see that, don't you see that as the biggest bugbear?
So if you look in context, right, so this year FIs have been seller, but the net sell is about $17-18 billion.
Yes.
Right? If you look at the context of the supply, the IPO supply this year is going to be about $20 billion. Okay. And the secondary stake supply is, as I said, about $40 billion, about twice that, right? Okay. So the total supply is about $55-60 billion compared to about $18 billion of FII selling. Okay. So the larger headwind to my mind is coming from that supply rather than the $18 billion of FII selling. Mm-hmm. The other challenge is that, yes, you are certainly right that no one is holding a gun to the markets and saying that you have to buy the primary issuances. And we have actually seen that coming through. And compared to last year, the retail participation in primary issuances has moderated. Okay. And increasingly, you are also seeing, compared to last year, the valuations being demanded in many of these issues coming down. Okay. And some of the multiples have been scaled back down by about 30-40%. So if the primary market multiples start coming down, that is going to reflect in the secondary market, right? Because it's an arbitrage. So why will a similar company in the secondary market trade at a higher multiple if in the primary market it is coming at 20-30% lower valuation?
So your short point is that unless the multiples wear down to the IPO multiples wear down below the secondary market multiples, we might see this plateauing of secondary markets?
Yes, and actually today, for example, even if, let's say, the IPOs stop, right? Of course, we know there are about more than 100 IPOs in the pipeline with SEBI, and there are particularly in the first 4 months of next year, there are some fairly large IPO that have been filed for, right? But let's assume that even if IPOs kind of stall at this level, but the 190 odd IPOs that happened over the last 2 years, the pre-IPO stakes of those also the lock-in expire. Okay. And that supply will additionally come to the market. Okay. And I was looking at some data that over the next 6 months, about $30 billion of pre-IPO lock-in is about to kind of expire. So of course, all $30 billion will not come.
May not be sold off.
Right. But again, if over the last 2 years, there have been 200 IPOs, and as you know, about 2/3 of these IPOs are offer for sales rather than fresh issue, right? So you will continue to see of these 190, 200 IPO that came through, additional supply coming through, even if new IPOs don't hit the market.
Got it. Okay. So Trump's complaint of rice dumping is very small compared to what an Indian investor can complain in terms of promoter share dumping. Okay, Ashish, nevertheless, today's bad news appears to be the fresh salvo from Trump, although it's only a verbal salvo as always. Let us assume, hypothetically, the deal doesn't get signed for another 2-3 months. Let's assume this financial year runs out. Are we going to see a severe reversal on both stocks and currency?
I think as much as we are looking forward to a trade deal, I think markets are probably underestimating the risk to tariffs, whatever tariffs US has imposed, not just on India, but their other trading partners, coming from the legal challenges. And from whatever I've been reading, the legal case against the tariff actually finds a lot of merit. The use of emergency powers for such wide-ranging tariffs is, I think, unlikely to hold legal scrutiny. But again, it's in the so I think that is another factor that we need to watch out for. Beside the trade deal, if because of legal challenges there is some rollback in tariffs. I think for us, for the currency point of view, and again going to your initial question that we have had stimulus coming from the RBI, from the government, and the markets have not responded, is the challenge that we are facing, that with export growth not coming through for multiple reasons, because of tariffs, because of weak global growth, you are seeing that as domestic demand has been boosted, we are seeing very high growth in imports. And this is despite oil prices being muted. So if you see over the last few months, non-oil, non-gold imports are growing at about 12-13%, nearly 1.4, 1.5x the rate of nominal GDP growth, right?
Yeah.
So I think this widening trade deficit is what is kind of weighing on the currency. It's weighing on the economy. We have seen the RBI, I think, take proactive action in trying to moderate the pace of fall of the currency. But with the widening trade deficit and current account deficit, their hands are tied, particularly given that on the capital account as well, we are not seeing any relief, right? So as you mentioned, you are seeing FII outflows. Even net FDI numbers have not gone up. So while gross FDI numbers have gone up, but net FDI numbers haven't really gone up.
Okay, I'm being warned that we're out of time, but I have to ask you this question. Because of this domestic boost that we have in taxes and rate cuts, are you expecting earnings to be far better? That can always be an attraction. What is your earnings forecast for next year?
Yeah, so I think that is really the positive news. We are quite confident next year you will see 15-16% earnings growth. And it is actually coming from a broad set of sectors. So it's something not too dependent on any particular sector. You are seeing it coming through in consumer companies. You're seeing it in cement, auto, of course, financials. So when the earnings growth is broad-based, the risk of the earnings downgrade, to my mind, is also lower. Right. So I think that is certainly positive. So I think we are looking for stronger nominal GDP growth as well next year compared to this year. And on back of that, you should see stronger earnings performance.
Oh, that's excellent to end this on a positive note. Thank you very much, Ashish, to pack in so many meaty replies and analysis in a short time. Earnings cycle about to hit higher, and that might be the answer. Growth might be the answer to our problems. Thank you very much for joining us. On that optimistic note, wrap up on Bazaar with the screen still showing a deep red. Chartbusters after the break.
26 years of CNBC-TV18.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best hai sabko pata hai. In association with Servo Hypersport F5, when speed is your default.
We have carefully reviewed your performance and promoting you to branch manager.
Sir. Hello, Motilal Oswal.
When life goes to the next level, download Rise by Motilal Oswal. Investments and securities market are subject to market risks. Read all the related documents carefully before investing.
Well, that's the holiday over.
When you fly Emirates, your holiday isn't over until your flight is over.
हमने 2.5 में सोचा था ये.
संजीव,
हाँ?
ये वाला घर पिक करना एक मास्टर स्ट्रोक है.
ये घर बजट से ज्यादा है. कौन देगा हमें बढ़िया होम लोन?
सचिन.
सचिन क्यों देगा होम लोन?
सचिन.
अरे मैं नहीं,
सचिन.
बैंक ऑफ बड़ौदा देगा तुम्हें बढ़िया होम लोन और बेहतर इंटरेस्ट रेट भी मिलेगा. बैंक ऑफ बड़ौदा से होम लोन लेना भी एक मास्टर स्ट्रोक है.
In the future, AI will use massive amounts of energy. So what is the future of energy?
Infinite clean energy. Avada, always clean, always on.
अब बस बेटी की शादी हो जाए, सारी जिम्मेदारियां खत्म. इसलिए मैंने ली है VIPshadi.com की मेंबरशिप. इनके टॉप रेटेड कंसल्टेंट्स ढूंढते हैं सबसे अच्छी प्रोफाइल. रजिस्टर नाउ.
Exquisite comfort. Bespoke hospitality. Culinary excellence. Big words, huh? Trust me. The experience here is far bigger. That's Air India now.
वरुण, आना.
वरुण कहाँ?
तीसरा महीना.
ब्रो, चलना.
छुट्टी पे तो चलकर.
चिल. मेरा बैंक मुझे चिल करने देता है. पैसे डालो फॉर्म भरो, पैसे निकालो फॉर्म भरो. और सुन, सेविंग्स अकाउंट में इंटरेस्ट पता है कितना देता है? इतना सा. और वो भी यार 3 महीने बाद.
नॉट बैंकिंग विद AU.
AU?
AU? AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने.
मतलब मनी 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 एवरी मंथ.
ब्रो, सोच बदलो और बैंक भी.
चल आजा.
आगे.
This is Network 18, and you're watching CNBC-TV18.